Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. What a 24 hours it has been. We've seen markets rally across the board on the back end of the FOMC meeting, where essentially Jerome Powell came out and said we're only going to do 50 basis point interest rate or Fed fund rate hike this meeting, and that's really going to be the tone and the pace that we're going to be setting interest rates at moving forwards. And we're going to be diving into it all in this video. This, of course, is my daily cryptocurrency market update. This is the main talking point because I was actually trading this and essentially before Jerome had even come out and given his interview, if you will, where he'd actually took questions and given his sort of broad public statement, I actually closed a lot of those positions, kind of seeing how markets were reacting to essentially the 50 basis points and how that was set. Markets are extremely dramatic. They overreact, they underreact. In fact, they rarely underreact. They mostly overreact. And that's what we got yesterday. And we're going to relate that to the cryptocurrency market. Has my short-term bearish bias changed? No. I think Bitcoin needs to see a lot more strength than what we previously got yesterday. And it needs to keep and maintain that strength. We're already seeing it somewhat slide off, but if it continues to go and we start to get above certain levels, then of course, you know, our bias is always subject to change. Long term, nobody's more bullish on the crypto space than me. I just think given the monetary policy shift, given the sort of geopolitical global situation that we're currently in, I don't think that provides a very positive outlook for markets across the board. So we're going to get into it all in this video. I could have pulled up so much to talk to you guys about. This could be hours and hours long of me talking, but we're going to try and keep it short and sweet. We're going to be bringing up tweets from the likes of Michael Burry, everybody's favourite bear, the big short guy, talking about Lynn Alden. She's got a tweet here. She's got a number of tweets here talking about a number of things. Also reckoning that, you know, there is a possibility the markets just go sideways and do what nobody wants them to do in regards to trading them. But let's get into it all, guys. And we'll also talk about a bit of news like the fact that Gucci is now accepting crypto in some US retail stores. This is coming. This is going to be a trend we see continue for retailers, if you will. So the overall market benefited greatly from what Jerome said yesterday. And even though they were hawkish, they weren't probably as hawkish as I think people were expecting. And I think markets across the board, given how down they've been, were really looking for relief. And I think Jerome provided them with that. He was very conservative, is probably the right word, to neither the up or the downside. He of course, he's not going to tell you which way he thinks markets are going. But what I mean by he was conservative to the up or the downside was he was very much calming, I think, for markets. You know, people were looking at maybe a 75 basis point, which is only 0.75%. And that would have been somewhat catastrophic and well over what's been priced in. And markets across the board right now, and what we'll do is we'll flip away from Bitcoin and we'll look at the NASDAQ composite to start things off, are, you know, trying to price in rate hikes. We showed you the euro dollars future and how there's a huge correlation here. With people trying to speculate on interest rate hikes and how that's going to take liquidity from markets, and, you know, trying to price in the interest rate hikes, i.e. where they think the market should be in relation to it. And the fact that we got a 50% basis point hike yesterday from Jerome, and that he very much said, look, we're not planning on a 75% basis point. It's always subject to trade, but we're going to keep doing the 50s, which I still think is very hawkish, by the way, but not as hawkish as I think markets were maybe expecting and sort of pricing in. You know, of course, this saw markets, NASDAQ rallied. The second I saw the NASDAQ and the S&P, the ES rally, I was like, yeah, I'm closing my shorts at this point. I am going to get back on those shorts. The only short that I didn't close was Rune, which we spoke to you about shorting. I got liquidated on that, unfortunately. It happens. It's not about, you know, most traders end up, it's my own fault for not putting a short enough, a tight enough stop and using way too much leverage. But everything else I sort of closed out marginally in the green, except for a few small altcoins. And the second that I saw this rally, the S&P and the NASDAQ, I was like, yeah, crypto's going to just follow. I mean, that's a total two, not the NASDAQ. Crypto's just going to follow along. And even I think the likes of gold saw a huge uptick. This, I don't trust this pump one bit. You know, this, I still think nothing's changed. The only thing that changed were people counter trending. You know, there was huge amounts of short liquidation, certainly for crypto. We posted that on our Twitter. For those of you that aren't following me on Twitter already, guys, head over to @RealAllInCrypto. But I still think we're in a risk-off environment. Yes, risk on assets may get a bit of a bid for now, but ultimately nothing's changed. And I still think the Fed were hawkish, and I still think that's going to continue moving forwards. And I think one big thing to watch, we've got the job reports data coming out on Friday. Watch that, because now his big line is, we've got a very tight economy, a very strong tight labour market, etc., etc., and that's a reason to kind of up things. And also watch CPI. Consumer Price Index comes out on the 10th, which is what they monitor inflation. If that continues to run away and we don't see any signs of that peaking, they're going to get more aggressive. And how do you think markets act to that when, the whole theme of that Jerome's speech was essentially talking about tackling inflation, really by any means. But right now they think 50 basis points is sufficient, aiming towards that sort of 3%. And this is a tweet here talking about the, I think this is the 2-year yields. We know bond yields are going through the roof and bonds are going down. They have an inverse correlation. And essentially rates have to follow. So we're looking at sort of 3% rates. And they're probably going to get that with their 50 basis points. And the issue you've got is if that changes, inflation continues to run away, and there's lots of things that suggest it will. We can look at crude oil and a number of other things. Then they're going to be more harsh, and that's going to see more downside for markets. And I already think even if they're not as harsh, markets still could see downside. I just don't have an amazingly positive outlook for the short term. Long term, again, nobody's more bullish than the likes of me. When we look at the likes of Bitcoin, we know it's at this very critical and crucial level. It still looks like we're going to get that death cross on the 3-day. Look at the last times we've had the death cross, when we've been sort of at this mid-range or mid-level of the long-term regression Bitcoin bands. We could be in for a spiller. And I just think, I kind of want this to hurry up and get over and done with. And I think this is really going to follow the equity market. Again, huge testament yesterday to just how correlated Bitcoin and the equity market actually is. Because, the equity market rallied, crypto just followed it. Some altcoins did absolutely amazingly yesterday. And you guys know that the shorts that I have are only ready to hedge the long position. Of course, I'm going to monitor them and take them on and off when I see fit. But I will be looking for another shorting opportunity. That's how the game goes, guys. And ultimately, you should never bet against or with the Fed, because they're always going to do something that is just, lots of counter traders, lots of liquidations took place yesterday, and that's kind of how markets go. But the thing to be watching now, and we'll do a little bit of TA for you, we're in this kind of channel. This falling wedge you have actually broken out of. And if you hold above it, this is clearly a falling wedge. You have broken out of it. If you hold above it, you may start to climb. And if we switch to the daily, you can see that you've got your 50 EMA and you've got your 200 EMA that may be possible targets moving forwards. But ultimately, I don't think the sentiment is going to be behind this market. So I don't think we have 2020 or 2021 sentiment right now in markets. I think people are still very risk off and are still going to look to minimize damage. And I think that continues. And I think whatever kind of a pump we get for the cryptocurrency market is somewhat short-lived. That is my bias. I am subject to change my bias when information presents itself. And in actual fact, what took place with markets yesterday on the back end of the Fed speech worries me, because it just was another testament to just how schizophrenic markets actually are. People are clearly not looking at the long-term picture here, and they're FOMOing their, bit of good news or what's deemed good news. I don't think it's massively good news, by the way, guys. I think markets were looking for some relief. They were, Bitcoin yesterday before it bounced was 45% up. I think the pump that we saw, which was a nice one, and you guys know I'm long crypto, so it's always nice to see, was around about 5-6%. People have already flipped from being bearish to bullish on the back end of that. Come on, guys. I mean, seriously, Luna was one that we did have short that I had to close, although it looks like it's selling off. I will be trying to snipe this and actually get another short in there at some point, because I think Luna could have quite a way to come down, certainly if the market persists. But what's really important is, what takes place now. This isn't a super strong rally. It's beautiful. It's nice to see. But it's not an amazingly strong rally, and we're already rolling over. What we need to see now is strength and continuation to the upside, and then we can relook at the situation. But if this rolls over and dies, well, guess what, guys? You've just had full confirmation of the kind of market that we're now in. And that's what we need to watch. That's what we need to pay attention to. Like I say, the only thing I got stopped out on was Rune. And only just, by the way, literally wicked into it, as it always does. And you can see the pump that Rune had was significant. I mean, I wish I'd long this, actually, to be honest. And I'd have probably got out somewhere around here, somewhere towards your 20% with a lot of leverage. You know, that would have been a couple of 100% return. And I don't recommend anybody trades leverage for reasons like yesterday. You know, the crypto markets at best are volatile. Cryptocurrency, certainly right now, cryptocurrency markets are insane. And you know, this is the first liquidation for me in a long time. But it is what it is, guys. You're not going to win every single battle. But the overall direction for me is that cryptocurrency markets continue to the downside, and we're going to see how this week, moving into the weekend, do we hold this pump over the weekend, guys? You tell me. Leave a comment in the comment section. I love your feedback, guys. Yes, I might not have time to reply to everything. Please watch out for the scammers, but I love interacting in any way possible, and even if that's reading your comments. That's something that, you know, I like to know what you guys are feeling. And do we hold this pump? Do we hold these gains into the weekend? Maybe. But are people not going to look to maybe take risk off the table over the weekend, given the fact that your stock market will close and everything saw a rally up? Does it hold is the big question, I think, moving forward. And this is a tweet from Michael Burry, everybody's favourite bear, or potentially not favourite bear, but, you know, he is a bear in general. I mean, he's the big short. The guy that shorted the housing market in 2008 and was telling everyone, look, this is going down, and actually came up with derivatives to actually short it. After 2000, the Nasdaq had 16 bear market rallies, 10% averaging, above 10%, averaging 22.7% before bottoming down 78%. After 1929, the Dow had 10 bear market rallies, more than 10%, averaging 22.8% before bottoming down 89%. So he's calling for us in a bear market. He's been calling for a huge crash. I think, you know, we could get that, but there's, you know, I'm a lot more optimistic than I think Michael Burry is, but I think his reasoning for why he thinks markets are going to go in the way they go is somewhat sound, given the debt markets, how indebted everybody is, and so on and so forth. This is from Lynn Oldham, with Jerome Powell saying that we are not considering a 25 bips hike. Did market hawkishness hit a cycle peak? Way too early to tell. To be honest, I love Lynn. She's amazing in terms of what she does. She's my, you know, I'm sub to a newsletter. I think she's absolutely fantastic at what she does. Very well presented, very well presenting it. But I'm not sure. I don't think we can rule out peak hawkishness just yet. And they were hawkish yesterday. People got this kind of sort of dovish idea that the Fed were dovish yesterday. They weren't dovish at all. And it's not just the Fed. The Fed are really the pace setter globally. Look at what Australia's doing. They did a 180 from dovish to hawkish, and they're talking about, I think, 50 or 40 bips. They raise in some sort of weird increments. You got the ECB doing the same thing, European Central Bank. You know, I don't think the environment that we have overall is supportive of markets moving forwards. It may be supportive in the short term. We may have rallies within that, and some of the most brutal rallies that you have are in downtrending markets, and that's why trading's risky. But at the same time, you know, let's see how the next week or so plans out. You know, I'm very much going to try and sit on my hands, look for shorts potentially if I think the overall sentiment's down. But you guys know I still hold all my long crypto. That's there for the next 5, 10, 15, 20, 30 years. You know, I don't think it's going to take anywhere near that to get to where I think we need to go and see new all-time highs. I think a year or so, we're going to get back there. It might even be at the end of this, towards the back end of this year, once we've got all this sort of turmoil and nonsense out the way. But short term, I'm still envisioning more downside, and I don't trust this rally at all. And bulls very much won yesterday in the very short term, very immediate future. But these guys are getting excited over a 6% rally. I mean, it's almost irrelevant on the 4-hour chart. Let's move it to the daily. It's relevant for a number of reasons, you know, sort of markets getting that sigh of relief, but it's kind of irrelevant in the long term. And there is short term, you know, there is definitely the scope for more short term continuation. And we did actually say to you going into FOMC, we wouldn't be surprised if the cryptocurrency market pumps off the back end of that. So that's really the bulk of what I have for you. I didn't want to make this too lengthy. I just wanted to sort of cover everything that's going on at the moment. We'd like Gucci accepting crypto in some US retail stores. This could have been because of BitBoy. I doubt it was, but everyone was sort of going mad about that BitBoy picture that he put up of him on top of, I think, a Lamborghini maybe, in a Gucci tracksuit. Not my style, but if it's his, hey ho, you know, who are we to judge? He's got the biggest cryptocurrency channel out there currently, and I think that's something to be impressed by, you know. So that's really all I've got for you guys. I'm going to love and leave you. You know, markets really saw the pump on the back end of it. I'm going to be watching this like a hawk. and really seeing how I think things play out. And I can't help but feel like markets, I still think people, the FTSE, I mean, if you look at the FTSE, for goodness sake, from its all-time highs, it's, barely even 1% down, barely even 2% down. And the FTSE is a completely different composite than the likes of the NASDAQ and everything else, but it's certainly interesting. And actually look at where you bounced. Certainly on your 3-day. That's a nice bounce, and you could see continuation of this rally, but does it last? That's what you need to be paying attention to. And not only does it last, how hard, if it does roll over, does it roll? If it rolls over hard, well, guess what? You've got your confirmation of what kind of a market we're in. And you're already at critical levels across the board. I mean, we've been looking at so many altcoins that have got, head and shoulders on the short term and so on and so forth that we think, could start breaking down major levels. And the likes of ADA, we spoke about ADA yesterday in regards to Jed. I love to see it. I love to see a pump. I'm a hodler of ADA. My overall consensus, though, is 20%. Beautiful. My overall consensus is, though, markets are going to roll over eventually and continue to the downside, even if we do have a relief rally on the currently taking place. And the fact, I mean, you can only really categorize this as a relief rally, to be honest, because it's provided relief. People were like, okay, shorts got wrecked. Go and look at the short liquidations, guys. It's extremely amusing to watch, even though my rune short was in there. But hey ho. All I have for you in this video, guys. Enjoy the rest of your Thursday, and I'll catch you all in the next YouTube video.